I think eventually it plays out where crypto is ubiquitous from a financial services perspective. But I think that'll be way bigger than 10 trillion in the sense that it'll encapsulate all financial assets in the world. But I also think that along that path, you're going to see new business models pop up and innovations pop up that we never even thought about. Anytime you reboot a system, that's where a lot of opportunity lies. And so this is a reboot of the financial architecture of, which doesn't change that frequently. And this is it. And we get to live through it. It's cool.
Scale is the blockchain that is simply built different. Other L1 networks have costly transaction fees, clunky user experiences, and lack true adoption in AI and on-chain gaming. Explore the gas-free ecosystem at skale.space/ecosystem and follow their journey on X at Scale Network. That is Scale with a K. Hit the link in the show notes to get started. Hey everyone, Jason here. Wanted to talk about something that's been on my mind a lot recently. We should not be just recreating the TradFi industry. That's why I'm excited to share with you that today's sponsor, Magic Eden, is getting into token trading, and their vision is to become on-chain Binance and then much more as the entire world moves on-chain. Stay up to date with Magic Eden's journey by giving them a follow on X at Magic Eden. Tired of losing track of all your tokens? Uniswap Wallet is designed to easily manage, store, and swap your crypto all in one place. Access thousands of tokens across Ethereum and more than 10 other chains instantly by using Uniswap's wallet today. Download it today. It's available on Chrome, iOS, and Android. Hit the link in today's show notes to get started. Hey everyone, Jason here. You've heard me talk about today's sponsor Mantle a lot this year, and I wanted to just take a quick second to really highlight them. With over $1.6 billion in total value, locked in a massive $2 billion treasury, Mantle has become one of the fastest growing networks in crypto. Through groundbreaking protocols and strategic partnerships, Mantle is really transforming what is possible in DeFi. To stay up to date with what's going on in the Mantle ecosystem, give them a follow on X at 0xmantle. Hey everyone, Jason here. There's a reason why Ledger is trusted to secure more than 20% of the world's crypto assets today. Check out their newest devices, the Ledger Stacks and the Ledger Flex, featuring the world's first secure touchscreens. Take your security seriously. Hit the link in the show notes of today's episode to check out their latest devices. Trust me, you won't regret it. Okay, everyone, special episode. We have macro extraordinaire, but officially CEO and CIO of Coinbase Asset Management and CEO and CIO of One River Asset Management, Eric Peters, back with us. Hasn't been on the show since, I think, summer of 22. Had to have him on post-election. So, Eric, welcome back.
Hey, thank you. Awesome. Great to see you guys again.
Yeah, good to have you back with us. Okay. Easy place to start here. Election just happened. Bitcoin at an all-time high. The S&P just had its best week of 2024. Also hit an all-time high. Risk appetite is clearly back on. Animal spirits back in the market. Would love to just hear, like, very broadly, I mean, how are you thinking about the world and obviously markets right now?
Yeah, God, I mean, so much has changed with this election. I wrote about it a little bit this weekend. I think that when the world changes this abruptly, it takes time for portfolios to reposition, and I think crypto will be even more so than traditional markets. But if you look at the pollsters coming into the election, even though the prediction markets were running ahead for Trump, the pollsters were expecting the tightest election in U.S. history or modern history anyway, and if you use that for a proxy for how large allocators of capital are positioning their portfolios, it just tells you that on average, and these people tend to kind of travel in packs. On average, people are pretty close to home. No one was making big bets on Trump. No one was making big bets on Kamala. If anything, the bets that they had on were for status quo, which meant that their bets were leaning more toward an extension of the Biden administration, right? Just because that's the operating environment that all these investors and portfolios were in. And so, to come up with landslide might be too strong a term to describe Trump's win, but more or less, based relative to expectations, it is. So now that that's happened, I think people are going to be scrambling and going back to the drawing board and saying, what does this mean for my portfolio? And I think what they're going to conclude is it means that things need to change a lot in people's portfolios. So a really exciting period for a macro investor. And then, as I mentioned, crypto, I think is crypto, like crypto always is. That reality is amplified for crypto, but it applies to all asset classes.
So, Eric, I remember my impression when you came on the pod a couple years ago was your ability to crystallize gains in a market, and that's really hard. I think just in crypto, but just in general. Um, you talk about people really getting the election wrong, and just from pollsters, how do you translate that into just broadly investing? Like people were positioned sidelined in crypto for a variety of reasons, but just in general in markets, like does that tell you markets are just incredibly inefficient? It's just become harder to be an investor. Like we're connected, but the information's just bad quality. Like how do you think about the job as an investor, professional investor, institutional investor, and how people have gotten it very wrong? And you would think that that would have changed because maybe the information's just more pervasive and whatnot.
It's always hard to be an investor. If you read back, I think the first investment book that I read was written by this really famous, or written about this really famous speculator, Jesse Livermore, back in the roaring 1920s. And the lessons that he described in that, relative to kind of the lessons I feel like I've lived and learned over the course of my career, they're kind of the same. So information sources shift around. I think what's happening in poly markets really, it's great. It's like, here's this new information source that most people scoffed at. I was kind of somewhat reserved about it because I know markets that can be easily manipulated usually are, but as we came closer to the election, like it's easy to manipulate a market way in advance of something. As you get closer and closer, and there's a lot of money on the table, like markets don't, they stare into the whites of the eyes of potentially losing a lot of money for just manipulating it, and things start getting honest. So it was really interesting to see how those markets behaved, and they were right. And so I think you're always shifting to new sources of information. Some of these quant shops, they started some years ago looking at satellite information of parking lots at Walmarts to see what the sales would look like. You're always, smart people are always hunting for something new. And so I don't think, I don't think investing has become easier or harder. If anything, things are always getting a bit harder because the competitive environment is, more and more. And after many years or decades of bull markets, you tend to get more and more smart people spending their careers in markets, as opposed to, like, I'm sure I wasn't trading in the early 80s, but I'm sure after the 70s bear markets, a lot of smart people were going into different industries as opposed to coming into finance. But at this stage, a lot of really smart people are in finance, and they use a lot of programming and big data sets. So it's hard. The hardest thing I think will continue to be to try to identify, and this has kind of always been the case for markets, is try to identify something that hasn't really happened before. And this election is kind of a little bit like that, to be honest. It certainly hasn't had something like this happen in a long time. So when you can identify something that you think might happen that hasn't really happened before, then and you're right about it, that's where you can make a lot of money. And so maybe that leads to where we are right now.
Yeah. Well, so you mentioned poly market, and you mentioned this is a thing that hasn't really happened before. Can you go deeper into how you're thinking about like societal Overton windows shifting, and like what like the magnitude of what has just happened in the last week?
Yeah. And you mentioned just and when we were chatting pre-call about the Overton window, which is kind of cool because I didn't even know what that meant about 5 or 6 years ago, and someone mentioned to me. I love learning new things. I was like, that's an amazing term, and I think the Overton window has shifted in all sorts of things across society over the last 5-10 years, and I think that process really kind of started with Brexit and Trump, and um, the first, his first term. All sorts of things have shifted. I think what's really interesting that's been shifting over the last few years really is just that affects our markets, affects crypto, affects TradFi markets, is that there's been a shift around is the economic orthodoxy of the last few decades, which is the entirety of my career. I started in 1989, maybe a few years before you guys, were active, maybe born. So like I started, and throughout that whole period of time, there have been all these assumptions about how the world works, how economics work, how um, trade alliances work, the importance of and goodness of globalization for society at large, and like there have been all of these assumptions that have just they're just assumptions, but they have been viewed as being givens or reality, and they're very, and so we call it kind of the orthodoxy, and that's starting to change, right? So we started to see during the first Trump administration this idea that hey, actually we can go out and we can put tariffs on China, and they're not playing fair. Well, behind the scenes, I was listening to CEOs talk about how unfair trade was or how their IP was being stolen for years, but no one kind of was prepared to say it because they wanted to make sure they didn't interrupt their sales in China, and that they were kind of things are being stolen at the same time they were getting revenue, and so no one really wanted to speak the truth in a way. And so I think what's been happening is people have become much more prepared to call into question that these things that we have expected to never change. I think a lot of that, I think we're going to see even more of that during this next Trump administration, and those are the types of things that really do change markets and change the way the world works.
Yeah. So the market has reacted pretty, I don't want to say aggressively to the election outcome. You could argue it's not as aggressive, or it is, depending on, you can ask a bunch of people. How do you think about re-underwriting your thesis under the incoming administration? How quickly do you update your thesis? Do you update your portfolio? And I'm just kind of curious what went through your mind when Trump won and how you're thinking about just positioning your portfolio.
So we tend to not talk specifically about what we're doing in the portfolio, but I'll talk in very, very kind of broad way about how I looked at the election, and this is informed by conversations I've had with people who are very close to the administration and helping craft policy. It's drawn on what I read, and I think X is becoming a more and more valuable source of information. I find myself spending more and more time on X, just looking at, I don't know, could be, it's like understanding what Vivek is thinking about and Elon is thinking about, and these are people that are going to have a real influence on what happens. So, at any rate, I think what I think basically what's going to happen now that Trump has won is the U.S. is going to make a bet, and I think relative to the potential bets that we can make, I think it's a smart bet to make. So you guys, I listened, the last podcast that you just had, you were talking about Paul Jones and maybe Druck and the concerns they have around debt. And those are obviously major concerns for everyone. Like you can't just look at the fact that we're running 7-8% deficits with an expanding economy and forecasts for those deficits to not really come down more than a couple percent over the next couple of years, and then they go right back up to the highs, and that's without a recession, right? So if we had a recession, we would end up with deficits that could be like 10, 12, 13, 15%, depends how bad it is. And this is with debt to GDP at 122%. So we're in a pretty precarious position from a debt perspective. The question is, what do we do about that? And then it's interesting, we can also talk about, if you want later, what other countries, how are they thinking about it? But I think in the US, here's what we're going to do with it, or here's what I think the Trump administration will do with it. I think that they're going to push hard to substantially increase the supply of energy to try to push the prices down. There's going to be very significant deregulation that takes place. And I think Trump was pretty hamstrung in the first administration from some of the things he wanted to do. I think he'll be much less hamstrung in that regard this time around. So he'll have a lot of deregulation. There's going to be a big push to accelerate AI to the greatest degree the private sector is able to, and that means providing the infrastructure and the reasonably priced or cheap energy to drive that. And you look at all of the and then all the tax hikes that might have been baked in, like those are all the old tax cuts are going to get rolled out. So, and they're probably going to be new tax cuts. They're probably lower corporate tax rates. It's an incredibly bullish environment for U.S. business, and the goal and the hope there, um, the hope there is that if we can potentially get to a place where AI is able to help boost productivity here domestically, then and we're throwing this business friendly environment at the economy and you get animal spirits going, you might end up in a position where real GDP starts growing way above where it's been for the last couple decades. And I think they're thinking if they can get real GDP in the 4 or 5% range, even for a few years, these debt issues go away. They don't
Mhm.
completely disappear, but they fade from prominence. Let's put it that way. So I think that's the
Mhm.
plan.
Yeah, I wanted to go to the second part of your statement there, which is discussing other countries and what they might do. A couple of just thoughts there is like, how does Japan dealt with it, or how's Europe dealing with it? But more so, also countries that hold a lot of their balance sheet in U.S. Treasuries, like China, and what how they're responding kind of in real time, and what that means for kind of the U.S. as a dollar, kind of as a global reserve asset, so to speak.
Yeah. Um, Europe is a super. I mean, Japan's interesting. Europe is super interesting because I think Europe's more dynamic. Because Japan's been kind of doing the same thing my entire career, which is their stock market recently took out its 1989 highs, but their stock market peaked the year I started trading, and they had a real crash. They essentially there are a lot of forces at work there. Some of them are demographic, and their their population growth really slowed, and then ultimately working population started shrinking, and like they've had all sorts of issues to deal with over the last 30, 40 years. Um, but the first thing that they did when their market crashed in 89 was they basically tried to underwrite it and say, okay, we're going to try to ensure that no one really fails here. And so they ended up ensuring that there weren't massive failures and a huge depression, which probably would have been healthy economically for them just to kind of wipe out the excess, but they just didn't. And so they had to kind of grow their way out of that over 40 years. And it created a really non-dynamic economy and pretty boring markets and awful stock market, really. So that's kind of what Japan has done. I think they're still more or less trying to do the same thing. They continued on with big budget deficits for ages. They have a huge debt to GDP ratio. They continue to run large deficits, and whatever. Japan it's a relatively small player compared to Europe or compared to China at this stage, and certainly compared to the U.S. Europe is really interesting because Europe's a big Europe's a big place. Its GDP is quite large. Population is big, and it has really stagnated economically. If you look at the top 25 market cap, I use this as I like markets as proxies for anything as opposed to economic data. If you look at the top 25 companies by market cap in the world, one of them is European, and it's a drug maker, and it made Ozempic or whatever. Some amazing drug that helps people not get skinny if they're fat. If you can solve that problem or help people or getting bald, grow hair back, you make all the money in the world. So they have figured that out. They've got one company, and that's it. 21 of those 25 companies are U.S. One of them is Chinese. It's Tencent. One of them is Taiwanese. It's TSMC. One of them is Saudi. It's Saudi Aramco. So it's basically the sovereign. So if you look around the world and you look at this huge pool of population with a large economy and no big companies really. it tells you that their model is pretty, I don't want to say broken, but it's certainly not dynamic. It's not entrepreneurial. It's not evolving in a way that's bringing wealth into that region. And so Draghi, Mario Draghi, who you guys might remember, used to be the ECB chief. He was, and he's a very credible guy, very smart guy, Italian, Goldman guy. He was charged with coming up with a big comprehensive report on EU competitiveness. And so he came out a few months ago and he said, okay, here's what Europe faces. It faces an existential crisis like it hasn't seen since the Cold War. And part of that is economic, and part of it is the fact that they've got a war on their border right now. And so his view is Europe economically needed to spend 4.9% of GDP every year in stimulus to just kickstart the economy and bring innovation back to Europe. Now, I sincerely doubt that the government is going to bring European innovation back, but that was his proposal. Okay. On the other side of the table is the ECB, which is the equivalent of their Fed. It's the European Central Bank. And they have come out within months of that report, and they said what we think needs to happen is that Europe needs to consolidate its fiscal balances by 3% a year. And because of population growth dynamics and things like that, you probably need to add another 2% a year, so that they need to fiscally contract by 5% a year. So you have one guy saying they need to expand by 4.9% a year. You've got the central bank saying we need to contract by 5% a year. That's a 10% swing. So that, to me, that's a incredibly confused region that is dramatically underperforming economically and in markets. And so now, like, imagine the U.S. presses the pedal, which is what we're about to do economically. Imagine what's going to happen with Europe. I mean, I'd love to hear what your perspectives would be on that. I have some opinions around that, but I think it's I haven't seen something that dramatically different between the two largest economic blocs in the world in my career. Nothing even remotely close to that.
Yeah. I think what I get excited about is I think the answer to any potential fiscal deficit or precarious budget situation, which we all know is true, is you innovate your way out of it through productivity gains. And the answer to that from a government perspective is just deregulation and let what the U.S. has done best historically to position itself as a leading country in the world, which is, as you pointed out, the best companies in the world have started in the United States or based in the United States. A lot of them started by immigrants. Like, it is aspirational still to come to the U.S. It has the best system for a variety of reasons. And so I think you just have to continue to press on that advantage. And crypto is becoming a non-small, non-trivial component of innovation. And so if AI and crypto combined, now we're going to have hopefully 8 years or just 4 years of less friction to innovate in a space that is really exciting, and in AI as well. And so less government, I think, is always a solution. And our allocator is going to put a lot of money into Bitcoin and abandon the dollar. I don't think so. I think you just want to beat inflation, and you beat inflation by allocating to sectors that outperform that. And that's likely not going to be real estate or some, old economy kind of businesses. More likely going to be tech, I think.
Very well said. Yeah. Totally agree.
Eric, I have a question based on what you said earlier about, we could be in a historic bull market with Trump's victory here, and things are going to go. Maybe animal spirits are back in the market. Do you think the Fed declared victory too early here?
I do. But also remember, the Fed has been operating with the information they had at hand, so it didn't know what was going to happen in the election when it started the cut cycle. And the Fed tends to just get on a schedule. I think that there's a real possibility that they've made an error and they did move too quickly. There are certainly people within the senior Republican Party who think that as well. And I think Powell, you saw when he responded, I assume recently, with his no and no comment, essentially saying that he wouldn't step down. He's a very smart guy. I know it's fun to make fun of central bankers, and I do all the time, but he's a very smart, thoughtful, serious guy. And I think that's going to set up a real conflict around Fed independence. So you talked about the Overton window shifting. I think and I mentioned that I think a lot of things are going to change. One of them, I think, is going to be, question in all areas of economic orthodoxy. One of those is what is the role of the Federal Reserve in in this economy? And it's hard for me to wrap my head around thinking that we would be better off with a less independent Fed, just because I'm steeped in orthodoxy, because it's just been, I'm trying to open the Overton window up on myself, not because I think we should change what happens at the Fed. I just want to make sure I have my head wrapped around what the world looks like if we do change the, call into question the independence of the Fed. I don't know that will happen. But anyway, yeah, I think that's now on the table, along with a bunch of other things.
Yeah. So how does this play into your ideas on, you mentioned the deficit, and just this debt crisis? Like, we have what, 30 some odd, 35 or 36 trillion in debt, growing by like what, probably, I think it's a trillion every 100 or so days right now. Like,
Yeah.
where does this go? And yeah, you mentioned, we mentioned Paul Tudor Jones on the show the other day, and I'd re-quote him and just say, his take on this is like, the only way to get out of this is to inflate our way out of this. Buy the NASDAQ, buy Bitcoin, buy gold, buy commodities, don't buy fixed income. Curious to get your take on the whole solution.
Yeah, I'm just, in general, I'm not really a fan of fixed income. And I know I don't speak for all investors, by the way. I don't know. I think in so many respects, fixed income throughout history just reflects a lot. Like, people invest in fixed income. This is going to offend some people, but it's just you kind of lack imagination. So, uh, or ambition. Like, it seems to me the best thing that you can do is, build companies, build things that have value. And if you can borrow money to do that reasonably without over leveraging yourself, that's what you should do. So in that sense, I'm kind of or emotionally and temperamentally always a seller of fixed income to try to build things. Um, I think there are times in the economic cycle where it's beneficial to own fixed income, and there are times where it really doesn't make a whole lot of sense to own fixed income. I think what happened was we went through a long period during the QE years where interest rates were incredibly low, and yet people bought them because they just kind of lacked the imagination. Or, you're a large pension plan, you're like, I have to have a certain amount of my money in fixed income. I think those, again, I don't think that that's smart, but I think a lot of people had fixed income that was at very low interest rates. And then we had this big inflation. The people who owned fixed income got destroyed. But then they saw, okay, well, interest rates are now higher because the Fed went on this historic rate hike cycle. And they said, all right, well, I was buying 10-year notes at 75 basis points, or 1% a year for 10 years. Like, I don't know why anyone would do that. But now, now I can own them at 3.5% or 4.5% or 5.5%. And so that looks attractive. Maybe, but I don't think so. I think given what's going to happen in the world here, with both inflation, which I expect to pick up materially, and also with economic growth, I think there are just much better places to put your money, rather than trying to guarantee yourself, 3, 4, even 5% a year. So that's why I don't think fixed income is attractive. I do think inflation is headed higher. So for all the normal reasons that people would stay away from fixed income, I think they should, because I think inflation will head higher. I think interest rates, for a time anyway, will probably head higher. And I think these deficits, I mentioned what the plan is, which is to really boost economic growth so that you can increase the rate of growth in the economy, and that increases the tax receipts, and that lowers the deficit. And all of those things would be good for longer term interest rates. I don't think they're going to happen right away, though. So the market's going to price in some probability that we're going to do all this stimulus, and it's not going to work as well or as quickly as we want. And that could push up long-term interest rates as well. Not to mention, the last thing I'll just say on that is, I do think that, I forget, one of you guys mentioned the pickup in animal spirits. I think we're going to see that over the next year or so. And then more and more people are going to be borrowing money. And that it's not only is the government borrowing money, but corporations, individuals will borrow money, and that will push rates up too, and push the bond prices lower.
Mhm. A lot of times, when we talk about crypto and what it will do and try to predict the future, we get all caught up in innovation and how important it is and how it's a secular trend. And, Bitcoin moves up 5,000 and it's at 80,000 and it's going to 250. But if it goes down to 70, it's going to 40. And so we have these kind of different moments in time. We believe in the technology, we're excited about it, but then there's someone more skeptical or cynical that puts up a chart of the correlation with crypto prices and like global liquidity, like M2 or something, and it's like it's perfectly correlated or very correlated with high beta to the Nasdaq. Um, how much of that do you think will continue to be true, or how much of that might decouple? And because we have now a more pro crypto administration in a way that I don't think we've ever seen before. You have a president that launched an NFT collection. There's been talks about having Bitcoin as a reserve asset. We might be able to get some regulatory clarity at a policy level that might allow us to innovate on what tokens can or can't do, and calling them for what they are, and perhaps getting a lot of companies and institutional investors that have been sidelined forever to get into the space. So you combine all of that in your thinking, and how much of crypto will continue to just be a levered Nasdaq, or how much might it be just a pure secular trend and really realize kind of its full potential, in a way that it's beyond a 10 trillion digital gold kind of benchmark or like target?
Um, it's a great question. Can I ask you a question before I answer that?
Sure, sure.
So when you say its full potential,
Mm,
because your idea of its full potential and mine might be different. I'm curious,
true.
how do you think about what the full potential is?
Yeah, well, what I'm doing now is I just appreciate that crypto will be used by every business eventually.
Mhm.
It will likely be invisible. It is a continuation of what the internet has allowed you to do, but it introduces a settlement layer. And that we haven't even started to think about or appreciate how much friction, like anytime you look under the hood of a lot of these systems, take payment processing, you appreciate like it is incredibly, incredibly inefficient. And crypto offers a very tangible, credible solution to that. And so I just think that we haven't even gone there, but for me, that's the true potential. Like we'll know crypto is no longer early when most businesses start using it, when the amount of just speculative activity becomes less than 20% or so. And that involves things like Polymarket that actually are just really embedded in you know, how we operate as a business or as a society. And I think like we're seeing early innings of that, but we're still very, very early. And it's in my mind greater than 10 trillion,
Got
greater
it.
than digital gold.
Yeah. Okay. All right. So we're thinking similarly. I think that in many respects, I think that crypto will have achieved its potential when more or less every financial transaction in the world is running on crypto and no one even knows it. And when we first got involved in crypto in November 2020, I just kind of arbitrarily said I'm going to be in this trade for a decade, and that's an arbitrary number. But the reason that it was more than like a year, and by the way, that doesn't mean you can't kind of buy and sell throughout that period, of course. But the reason for coming up with that is I thought that the reason that we got in the first place was, and it's a view that one of our clients, our biggest clients, had, and I shared as well, is that we thought that we had entered a period of real monetary debasement, and the catalyst for that had been COVID and this huge increase in government spending that we thought would kick off a long period of monetary debasement, essentially, where we take on a lot of debt, we do a lot of things. There were a lot of things to spend money on. There was spend money on COVID, and spend money on environment, spend money. Didn't even know about AI really at that stage. Spend money because the world was becoming a more hostile place. It's become even more hostile. Like there were a lot of things to spend a lot of money on. Not to mention the baby boomers are really getting ready to retire, and there's just not enough money to kind of go around. And so those are the reasons. But crypto seemed like a highly convex way to express that theme. But the question was, well, how will you know what's the right price? How will you know when that theme has played itself out? And I think that you won't even be in the zip code until everyone who has any kind of banking relationship or account has a crypto wallet. They might not call it a crypto wallet at that stage. It's just an account. But at that stage, then all the things that are crypto native, like Bitcoin, can anyone who would have any inkling to buy something like that would have the ability to do it very easily without any frictions. And so I figured that that process would probably take a decade. Now, maybe it happens in 7 years from 20, maybe it happens by 2027. I doubt it. A decade is probably in the zip code. Maybe it takes a little bit longer. But once that happens, then I think all the things that you just described will have been achieved. So I think all money transfers, everything will be done on crypto rails, and that's and at that stage too, you will have you will have seen some amazing companies build and flourish. Like Coinbase, for instance, is obviously I'm talking my book, right? But I mean, anyone objectively would look at Coinbase as one of the big infrastructure providers of this whole new technology. And so anyway, I think that's how I think eventually it plays out, where crypto is ubiquitous from a financial services perspective. But I think when you look at, so that'll be way bigger than 10 trillion, in the sense that it'll encapsulate all financial assets in the world. But I also think that along that path, you're going to see new business models pop up and innovations pop up that we never even thought about, that are going to be, I'm just so excited, I'm so excited about it. I republished my case for digital assets this past week, and I don't know if you guys saw it, but that was, I wrote that in early January of 2021. And that kind of captured what I was thinking, where I was thinking this all could go. And I feel like we're really on track. Like we're really on track. And they're going to be, not everything will be right, but I think there'll be all sorts of new innovations that are built on top of this that we just didn't even, like we couldn't have even conceived of. So anyway, I think we have a long, long way to go.
Yeah. When you think about entering and exiting a market, at times, we kind of know what the 10-year plan looks like, but of course, how you get there is very you know not easy to predict in any way, shape, or form. Um, there are some folks saying, "Hey, look, if you've been sidelined, that window is closing very quickly here. You got to update your priors to the election outcome and just really gonna get on the bandwagon, or you're gonna miss the train." I sort of think that if you take a longer term view, you appreciate that we're still very, very early. How do you kind of marry those two concepts? Like, how do you think about? I know you can't like necessarily speak of what you're doing, but like as an investor that I you know think has done very well, just kind of managing the market cycle. Like, what? I guess if you had, I don't know, a portfolio from scratch, like how much of that are you just fully risk on, fully allocated, or how do you think about just playing out the market and the next couple of months, so to speak?
So I think we haven't yet come close to appreciating what this new Trump administration means for markets broadly, which I mentioned earlier, and that applies to crypto. Um, the hostility that we experienced in this industry over the past, nearly 4 years is pretty mind-boggling. And I won't comment a lot on it and disparage some of the people and the tactics that they used, but I think a lot of that will be revealed, I suspect, in the courts over the next 6 or 9 months. And so maybe they'll be over the next year or something like that. But I think the new administration that's coming in rightly views this industry as just a technology, the U.S. financial services is a huge sector of this economy. And we have the deepest, most liquid markets in the world. We have the world's reserve currency. And these technologies are well suited, or maybe even more directly, just you could say, like, they're designed to basically fulfill all of the infrastructure and the guts of a financial system, and so it would be it really would be a huge miss for the U.S. to not lead in this industry. And I think that that's going to start happening. A lot of people moved abroad. I think a bunch of those people start moving back. Not all the regulatory changes and political and policy changes will happen overnight, but like directionally, they're all happening and they're going to happen. And so, yeah, I think that, you know, we'll start moving in that right direction. And then from how that affects markets and market prices, I think people over the next, let's call it a couple months, will start to really realize that institutions really have not allocated to this space yet, which is amazing, by the way. I mean, when I say they haven't allocated, hedge funds trade it, there's a pension here or an endowment there, or but in the biggest pools of capital in the world are totally unexposed to this. They might have had some VC that ended up owning some crypto, and then mentally they're like, well, we own some because we had a teeny sliver of some private or venture fund, but they don't really own it. So, and I don't think that they're going to come in mass over the next 3 months. It just takes them too long. They're going to go, they got to process this and go into year end, and then they got to go into like their quarterly reports, and they have to now get their trustees to wrap their heads around the fact the world's changed. Like there'll be a cadence to this. So I could see, depending on where prices go, I could see the market getting ahead of itself, expecting huge flows that don't show up in time, and then the market comes down. That's kind of what happened, by the way, in 2021 into 22. It was amplified with a massive rate hike cycle. It was amplified by blowups in crypto, by FTX. It was that bear market was amplified, but you could see volatility around people just getting too excited too early, and then it has to come off, and then people get apoplectic about it, really depressed. So they'll be trading up, like nothing moves in a straight line. But I think we're now on the institutional. This is the institutional cycle, because like look what BlackRock did with the ETFs. Like the institutions now know that they're going to have to build on these rails, and they're investing a lot of money to do that. They just haven't bought the assets yet, which is really interesting to me. But anyway, that's how I see it playing out.
Skale is the blockchain that is simply built different. Let's face it, other L1 networks have costly transaction fees that increase as the network gets busier. Skale has solved this problem with a gas-free, scalable infrastructure where users never pay gas fees. Skale was awarded the most active gaming chain in 2023 by CoinGecko and hosts 5 of the top 25 games on DApp Radar. You should definitely check out Skale. I was using it the other day. It really is incredible to use. That's Skale, spelled with a K. Hit the link in the show notes, or head on over to skale.space/ecosystem to get started today. Hey everyone, Jason here. I wanted to take a second to break down why Magic Eden's getting into token trading. Their team is extremely concerned that crypto is still consolidated in the hands of a few centralized exchanges who act as gatekeepers, ultimately recreating the TradFi space. They believe that crypto is still missing an on-chain Binance, and their aim is to move trading completely on-chain, fully decentralized. They've done $6 billion in NFT volume in the last 3 years and have had more than 1.4 million users visit their platform in the past year, making them the #1 NFT platform in the market today. They are the ones that can do it. Stay up to date with Magic Eden's journey by giving them a follow on X @Magic Eden. Uniswap Wallet is designed to easily manage, store, and swap your crypto all in one place. Access thousands of tokens across Ethereum and 10 plus chains, including Base, Arbitrum, Optimism, and more. Uniswap's wallet has built-in MEV protection and 0 gas fees with swaps that go through Uniswap X. You can also swap with the peace of mind that the code is completely open source and independently audited. Download it today. It's available on Chrome, iOS, and Android. Hey everyone, Jason here. Wanted to just take a quick break and highlight everything that's been going on in the Mantle ecosystem. In just 1 year, Mantle has seen its TVL surge by over 1,100%. now reaching $1.69 billion. That's just such a crazy amount to think about. More than 225 protocols have made Mantle their home, while the platform's EcoFund has invested $38.5 million in 51 pioneering projects. Through strategic partnerships with Bybit, including MNT as collateral, supporting Athena to scale, and the first Ethereum L2 to integrate Ondo Finance, they just continue to be on the bleeding edge of L2s. Be sure to stay up to date with what's going on by giving them a follow on X at 0xmantle. Special thanks to the incredible Mantle team for sponsoring today's episode. Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets. So, Eric, what does the institutional cycle do to the typical 4-year cycle, right? Usually, December 2017, and then you kind of go down into a 2-year bear market, and then 2 years of up, and then, November 2021, and then down. And we're actually tracking pretty perfectly, actually, the typical 4-year cycle, which would say, maybe this market tops out in like October, November of 25, right? We've got about a year from now. I'm curious how you think this institutional adoption will impact the 4-year cycle, or maybe it doesn't.
Yeah, I don't. I suspect that as this whole market industry becomes more institutional, that some of the cycles that dominated when it was really retail will shift.
Yeah.
I don't like. I suspect that will be the case. I think that as more institutions come in, and as I said, they have hardly come in at all. But we've got years of them coming in, and I think as they people tend to follow price up, so there's always more buying into highs, and then there is into the lows. But I think that the downside fall will get dampened by institutions that begin to take up their allocations of this. Like just look at if you look at gold, this is, I hadn't really thought about it quite like this, but like if you look at gold in 2015, central banks, foreign central banks held like 1.5% of reserves in gold. It's about 5% now, right? So it sounds like, it's a big percentage move, but you're like, oh, 1.5% to 5%, that's not that big. But that's been a lot of gold buying that's taken place. And, I think after the Ukraine invasion, after Russia's invasion of Ukraine, the West locked up $300 billion of their reserves. And that made all of these big players say, hey, wait a second, the Chinese, I'm sure, saying if we ever invade Taiwan, we can kiss any money that we have sitting in treasuries away, which is why I'm sure that they're, just to mitigate risk and increase their leverage and negotiating power around any situation, they're cutting treasuries. But like, you see what happens when there's a catalyst for big institutions to move their portfolios around. Gold is rocketed, and the declines aren't that big. And so I think that I think as big institutions want to take on crypto exposure to balance out their portfolios, the downside is there will be downside because markets never go in a straight line, but I think it will be more muted than it has in the past. And I suspect that will shift its cycle too, but I don't really know.
Yeah.
Thankfully, I don't have to get that right now.
Yeah.
It's a long way off.
There's a big institutional allocator survey done by this firm MV Capital that I was reading this morning, and I was actually surprised by the lack of upside conviction. And these are folks who allocate to crypto. Particularly, I was surprised by the lack of upside conviction in BTC. So the survey, I think it was like, I don't know, roughly 100 allocators. They saw BTC peaking somewhere between 100,000 to 150,000. Now, this was pre-election, so that's obviously a massive impact. But I'm curious how you think about just like the base case, the bear case, and the bull case for just Bitcoin in this cycle.
You mean between now and
Let's call it the next,
like
like by the end of
late 25?
25 or something. Yeah, the next
Yeah,
12 months.
yeah. Um, I mean, my bull case is way higher than 100,000. And you could get there. You could get there really quickly because
I mean, it's at 85 today or
yeah,
84
like
today.
what people don't really realize is just you know prices can move so much just on the marginal buyer, the marginal seller. And I started my career in commodity markets, so I kind of it's just been part of my my whole career is just seeing just a little bit of demand at the around the edges can really change the price of something.
Mhm.
So um, I think I, I don't know. I mean, between now and the end of 2025, could Bitcoin triple? Number one, it could do anything. So and that really is the truth. Um, but I don't see any reason why it couldn't do that. It's a big number, but again, if you look at if you look at the U.S. saying actually we're not going to do everything possible to try to destroy this industry and the players in it, and actually
Mhm.
the U.S. looks at it and goes, you know what, the dollar's reserve currency, and by the way, we've been advocating for this from the outset. The dollar is a reserve currency. Dollar stable coin is the killer app in this space right now. I know you guys have repeated that multiple times as well. And um, dollar stablecoin could, in a way, rewire the global financial system. In that dollar usage could become ubiquitous because it becomes so easy in a world where everyone has a crypto wallet. You can hold
Mhm.
money in dollars, and that feeds back to. I think you mentioned it on your last podcast. It's like stablecoin issuers could end up owning massive amounts of U.S. Treasuries. And what is that like? How and why would that happen? It's like the whole world starts saving their money in dollars via
Mhm.
stablecoin that flows through to to Treasuries. So like I th- I think that anyway, I think tripling between here and there, that could happen in terms of Bitcoin. Downside, I don't know. I, I mean, downside, you can always fall 50% in a market like this. I don't think that we're going to between here and
Mhm.
there. I think that the risk reward is skewed way more to the upside. I mean, even saying down 50% versus tripling is very skewed to the upside, but I just don't think we have that kind of downside unless there's some type of really big geopolitical event that takes place. Um, and that, that's on the radar, but I think there's way more upside than downside. And I think
Yeah.
just the last thing just around the administration, I think, once the administration starts getting behind this theme of these technologies being in the US best interest, which by the way, that is what the insiders believe, and that's the advice that Trump has clearly gotten, because you can kind of see hints of that in his statements. I don't know. Imagine what happens if the US really doesn't just get out of the way, but kind of gets behind these technologies. I think
Mhm.
people will conclude that at some point Bitcoin's just going to be worth more, more tomorrow than it is today, and they'll just be buying it. And I don't
Mhm.
know what will happen to that price. But but that's a pretty good risk reward, up 3x versus down 50%. That's pretty darn good, particularly
How
if
do
you
you think
buy some
about
of the upside.
Yeah, how do you think about other assets, other crypto assets, Ethereum, Solana, and then farther up the risk spectrum um, in that equation?
Let's go. I've got two charts I want to show. That one is ETH BTC and then one is Sol BTC. So Eric, I'd love to get your take on both of these charts. Maybe we could start with ETH BTC.
Yeah. I think what's happening, and what I think what has happened in ETH relative to Bitcoin is in some ways it's actually really healthy. I know that everyone's so negative on ETH, and And I get it, by the way, because when you own something and you want it to go up, and I own ETH, I don't get emotional about it, but like, I know the emotion behind, like, you buy something, you own something, you want it to go up, and it doesn't, and you just get
Mhm.
depressed about it. Um, and then it makes you want to sell it. And I think we're kind of in that, we've been in that zone. So, but here's what I think is positive about ETH. I think that the global financial system will be built on ETH. Um, it might be that it's in part built on Solana. I'm not sure yet. Um, I'm not sure about ETH either, by the way. I have a very high conviction that that will be the case because it's been around for a long time. So many things have been built on it. A lot of the bugs have been worked out. Like, it's gone through a lot of upgrade cycles. It's a pretty impressive technology. And I think that the global financial system will get built on ETH. And yet the way it, for it to be built on ETH, the cost of transactions had to collapse. And so these L2s have been built, and that's pushed the price of transactions to extremely low levels, and then it will go down even further. And I think what has to happen is you have to start seeing wider and wider spread adoption of ETH and things built on it that actually start transacting. And then you'll start getting this picture of, okay, well, in the future, there are going to be so many transactions pumping through the system that essentially for providing the security, um, the value should just be higher than it is, and people will start putting money into it, and it probably goes up more than it should, and that makes transactions a bit more expensive, and it'll just be this perpetual race of technology to kind of keep transaction prices down. But I think
So
that
you think it trades more on this, like, global settlement layer, security premium, basically less of like, it's trading on the fees that it's spitting off or anything
I
like
think
that.
that they're connected. I think that
Yeah.
those are connected,
Yeah.
and so you have to have, the problem is the world hasn't transitioned to this system yet. The global financial system hasn't yet, not yet transitioned to this system, but I think it will. And this, again, this political change makes it a lot more likely that it will, because as as goes the US market, so goes the rest of the world, essentially.
Mhm.
So if all of these things are now more likely to happen in the US faster than they would have otherwise happened, I think that they were inevitable in the US, but I think, if Kamala had won, I think it would all have been a lot slower. But now it's going to be a lot faster. And so I think all these things are coming sooner. But there's just this disappointment trade in ETH for the time being. I
Mhm.
think ETH will at some point be quite a bit higher, and will probably be quite a bit volatile. And then Solana, I just think it's just kind of it's a higher beta trade. It's just it has a much lower market cap, and um, it's playing catch up, and people are more excited about it, and it's going up, so people buy it, and I don't know. I
So
think that's what's going on.
so
I mean,
let's
well,
say you
Erica, I'm just going to ask the question that I, in my mind, have thought out about for a while. Like, Solana currently is a third of ETH's market cap on a fully diluted basis. If you look at across a number of KPIs, do you think that that is appropriate, um, too high, or too low?
I don't know. I really don't know. I think, and I say that because, by the way, I try hard, just as a general discipline, to say I don't know as much as possible, because for two reasons. Number one, most of the stuff is unknowable. I
Right.
think it's premature for any of these technologies to really know what their ultimate value will be.
Mhm.
And so, even if there's a framework that looks sensible right now, I think in 3 months or in 3 years, you'll look back and be like, that really wasn't the right way of looking at it. So I think there's a big momentum trade going on in this right now. I think if you look at the market caps of both of these, you should kind of look at it on a probability adjusted basis. Does it seem kind of right,
Mhm.
this ratio? And it's like, yeah, I think I could see
Mhm.
that, but I don't believe that there's a really great complex pricing model that should
Mhm.
spit out what this relative value trade should be. I think
Mhm.
I think Solana looks to me like it's going to keep outpacing ETH just because it has been. I mean, that's not very sophisticated. But I think at some point that probably flips around as well. I think because I think finance gets built on ETH.
So
Right.
Eric, let's say you're sitting down with someone who's got $1 million to allocate. They're maybe, I don't know, they have strong risk appetite, 30 to 40 years old, so they can take some risks. They've got $1 million to allocate. They're not allocated to crypto right now. They're looking at these markets. It's ripping. How do you suggest they allocate? Is it a 1/3, 1/3, 1/3? Is it, how do you think about this?
I don't get asked that question, so I'll take a flyer on it. I'll take a flyer on it. I mean, you say high risk appetite. Like, what does that mean? Like, when I think that's probably the first question I would ask someone who asked me that. It's like, what does that really mean? Does that mean you'd be cool with losing half your money and then having a just deadline there, or is 3/4 is that what it means? Because most people when they say they have a lot of risk appetite, they don't really mean it.
Then they panic.
Until you get punched in the face, you really understand how much risk appetite you have.
Yeah.
You know what I mean?
Yeah. I mean, I have had my face ripped off multiple. Like, I kind of when I say I have a risk appetite, like I'm pretty well calibrated. Like, I actually know what that means to me because I just, I've gotten hurt. I've taken a lot of lumps over my career, but look, I think that most people, when they say they have a lot of risk appetite, they don't really mean it. And so if you had a 30, 35-year-old person, I would advocate for them to be overweighted to Bitcoin and ETH, but have some exposure to Solana. So, maybe that's like 50, 35, 15. That adds up to 100, right? Maybe something like that. I think if you're right on that trade, you're at least for a period of time, you'll wish you'd had $1 million in Solana. You'd be like, why didn't I do that? I have such a high risk appetite. And you're like, well, yeah, maybe. Like, that's okay.
How do you think about just the sequence of how the market unfolds? Historically, it's been Bitcoin led, then trickles down into other assets. Do you think that's still true in this environment? Just as you think about the larger institutions that have been sidelined, of course, now you have an ETF, so they may have expressed that view now through an ETF. It's probably easier. But capital going into managers that are investing in these tokens, like, I'm just curious how you think about the intra-asset allocation correlation, which has been very coupled, and also the sequence of the rally, the cycle itself.
Yeah. The institutions, it is easier for them to invest in these assets right now, for sure, with the ETFs. But they really haven't done it. I mean, not in size. So, so kind of the question is, in this cycle, now that we have institutions that are getting involved, what are they going to do? And I suspect that they're either going to just buy Bitcoin at first, a lot of them, or they're going to buy some ratio of Bitcoin and ETH. I think if Solana, keeps doing well, you probably get an ETF. You guys were talking about an ETF sometime next year. I mean, I don't have any insight into that, but that wouldn't surprise me. So then you'd see flows, if that were the case, into all those. Some of them will go directly into the coins themselves, but I think as institutions put capital work, they'll probably still focus on Bitcoin just in the first instance, because that is where it's going to be easiest to get their boards and their trustees to understand what Bitcoin is. And ETH is just, I know it seems a little nuts for maybe you guys and for me and the people listening to this to think that people can't wrap their head around ETH or Ethereum, but a lot of people can't. So at least not yet. And by the way, I look at that and that makes me excited, because if you have, if you have complete knowledge in any market, it becomes the most boring thing in the world. Like, the best thing for, long-term bull market is to have a whole lot of people who don't understand something, who are going to gradually, are going to gradually learn about it. And I think that is what's going to happen here. So anyway, that's what I think that Bitcoin it's probably to a degree, and it's not the institutions that are driving it right now, but it probably is more retail, high net worth people because of the ETFs, whether they're buying it directly in the ETF or buying it, with Coinbase or some other account. I'm guessing that's why Bitcoin is kind of outperforming.
Yeah, I mean,
Or
I
has
still
been.
to this day, it's mostly self-directed accounts, not managed accounts, right? Your
Yep.
JP Morgan private bank can't actually recommend the ETF. You have to call them and say, I want to move stuff, and so that is friction. Not to mention, just going back to the discussion earlier that we're having, right? I mean, most of the world is stagnant. Most of the best companies in the U.S. have been built. Most of the best companies in the world have been, are U.S. based. All this to say, most people can't invest in the U.S. stock market. Now, I've always felt that crypto allows you to diversify your portfolio. If you're in some of these markets, your only alternative is investing in local real estate and government bonds. And I think crypto is sort of a possibility for people to invest in a proxy like the U.S. market that has more, you mean like diversify their portfolio, and it starts with holding a U.S. denominated, stable coin, and then transacting in this digital economy and investing. I'm excited to see tokenized stocks. I mean, why? Hopefully, we can get that in the next couple of years, and that would just be explosive for the U.S. market. I mean, talk about just continuing to double down on the dominance of the U.S. as the leading economy. Like, why couldn't you have a tokenized stock that is settled in real time, not T+2 or 3 or whatever? Because I think most people don't really appreciate, like, most of the world can't buy Apple stock, and if they can't buy Apple stock, then you kind of say, okay, what else are they going to buy? If they have the possibility to have a US, like a stable coin that is dollar denominated, then what's the menu? What's on the menu? It's going to be Bitcoin,
Yeah.
it's going to be Ethereum, and then
Yeah.
it's going to be Solana and all the meme coins and all the other stuff. And so, like, I felt in 2018, like, ICO boom, that it could be, kind of reach the level of liquidity that you saw in like the .com bubble or more now, because the world, like, I mean, like, but we never got to that. And I was like, well, why couldn't we? Hypothetically, actually, it was only a fraction of it. But now this time around, of course, the limitation is local people in India, China. At times it becomes hard to interact in crypto. The government's really making it difficult. But it's always, every government in the world always looks to the U.S. for inspiration of what they do at the policy level. So because now Trump is has an NFT collection, goddamn it, then governments really say, okay, if the U.S. is fine with it, then I can be fine with it. Like, I'm not going to look like an idiot.
Yep.
So I think that's like that hyper bullish drink
It's
the
like the
Kool-Aid
career
kind of
risk from a
scenario.
government perspective. It's like
Yeah.
Eric Yu buying Bitcoin, and Paul Tudor Jones in May of 2020 when he said
Like,
it's the fastest horse in the race. That
Yeah.
wiped away the career risk for hedge funds.
totally.
It's
Yeah.
like Trump is wiping away the career risk for
Like
government.
the El Salvador president's up now 100 million on his trade. He's looking like a genius, but he was ridiculed for so long. You know what I
Yeah.
mean? Like that's
Eric,
going to go away.
Let me
Yeah.
ask you okay, on this note, what about Fortune 500s and corporations buying Bitcoin? Because I think everybody is watching what Saylor is doing.
Yeah.
But he's basically turned MicroStrategy. I used to compete against them. I was in the business intelligence world. And they were a data analytics company. Now they're just a Bitcoin company, obviously.
Yeah.
What do you think about the idea of corporates holding Bitcoin on their treasuries?
Everyone's looking at Microsoft right now, right? So
Right.
what they're going to do? I think that they will. Are they going to do it
Like,
right away?
why does it make sense, and why does it make sense?
I don't think I don't think they're going to do it because they've seen how it's worked for MicroStrategy. It's just a totally different investment thesis, and the people that are making that decision at any corporation obviously know that. So no one's going to do that. He's the only one who probably should do that,
Right.
and and he has, and it's worked out really well for him. But I think if you're you're sitting on a huge corporate treasury and you want a reasonably diversified portfolio with liquidity, I don't know why you wouldn't look at crypto. I don't expect that there's going to be a large flow of that money that's coming in. I think it'll be really interesting to see when I don't doubt that there will be a company that says, yeah, we're going to approve of, whatever, some couple percent, few percent of our treasury we're going to put in these assets. I think that'll be newsworthy. I don't think that's what's going to ultimately drive these markets higher, but it's probably part of the narrative that goes there. By the way, before we get back too far away from the previous comments, I do think that equities will be tokenized, and this is this is an example of how crypto just kind of takes over the world, because all this becomes actually pretty easy once you build these rails. So the trade, imagine the trading activity that happens. I don't know about India, maybe India ends up being a bit further behind the curve than others, but the cool thing is that I think that the big developed markets, because the U.S. was shooting itself in the head on when it came to how it treated this industry, I think there were a lot of other regions that said, okay, this is an opportunity for us to beat the U.S. in this whole space, and so we're gonna race ahead. So I think what will happen over the next few years is that the U.S. will begin to lead, but there'll be some regions that that have advantages in one area or another, which would be great. There'll be a lot of competition between regions, but at the end of the day, rich countries by definition are the ones with all the money. So when you open up global trade and finance to U.S. equities or global equities that are tokenized, there'll be plenty of money that will flow into that from abroad, because those rich countries are the ones where people actually have money to invest. So
Who, Eric, in that scenario, who wins the most? Like, obviously, it's always in investing, like the relative trade. Is it the BlackRocks, Coinbase, the base asset like Solana or Ethereum or Bitcoin? I'm curious, as you think about a portfolio construction, or just who the major winners in the scenarios that we're talking about might be.
I definitely think that the infrastructure providers win massively, and to my knowledge, I don't know that there's a better infrastructure provider than Coinbase that has the number of reps that they have, meaning like the number of cycles that they have dealt with all sorts of difficult technological challenges, security challenges, scaling challenges. So that should be a massive winner in that world. But any provider of infrastructure, and some of those are probably still private too, right? So people should figure out how to make those investments. I think the reason BlackRock has been so aggressive is because they didn't want to lose out. BlackRock looked at the mutual fund industry and said, we can do this better, and they did, and they're now a massive company. And I think they looked at crypto early. Like when we were looking at crypto, they were looking at it, but they weren't really going after it at that stage. But they were curious about it, and I think it's because Larry Fink's a smart guy, and when you get a founder CEO who has disrupted an industry once in his career, and you're you're hungry and you're smart, which he is. He probably looked at it and he's like, I do not want that same thing to happen to me. So I think that's what they're doing, but that doesn't mean that they have all the best expertise, and they'll need partners. And so, but I think BlackRock could be a huge winner. Absolutely. But yeah, that's kind of how I look at it. I think what's going to happen over the next couple of years is now all the other financial players, the TradFi players who haven't really been involved, and some of them have been making either no investments, modest investments, or reasonable investments in this infrastructure. They're now going to just go on a hiring spree, and they have got to make sure that they don't get wrecked in this next transition. And so that'll be really exciting, and there'll be a lot of interesting partnerships that form, I would guess. But yeah, look, anytime you reboot a system, that's where a lot of opportunity lies. And so this is a reboot of the financial architecture of, which doesn't change that frequently. And this is it. And we get to live through it. It's cool.
I think that's a good place to end it.
All right.
That might be the clip of the ep. I mean,
All right.
God, if you don't get excited by hearing that, like, you know what I mean? Like this is a generational trade.
Totally.
A reboot of the financial system. Like, you don't get that often.
Yeah.
Forever.
Yeah.
It's pretty exciting.
Yeah.
That's
Eric,
great.
appreciate you joining us, man. This was
Awesome.
a fantastic conversation, and no one else we'd rather speak with about state of the global. Just as we said earlier, the Overton window is shifting on many things.
You said it. Yeah, I agree. I agree with you. Yeah, look, a real pleasure. Thanks for having me on. And it's let's hopefully all make a lot of money here.
Indeed.
Absolutely. Eric, thanks so much for joining us. I appreciate it.
Yeah. See you guys.
Hey everyone, thanks for watching today's episode. Just wanted to quickly thank today's title sponsor, Skale. Skale really is one of the best chain experiences out there today, and I've used so many different chains. There's a reason they are gaining so much adoption in both gaming and AI use cases. Hit the link in the show notes to explore the Skale ecosystem.